Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Interpret, an AI-enabled customer feedback intelligence platform for product development and CX teams, raises $20.8 million in Series A funding, led by Canon Partners, with participation from Kleiner Perkins, Peak 15 Partners, Bing Ventures, and Recall Capital. Khosla bagged Akash Systems signs $27 million contract for its revolutionary diamond-cooled AI servers with next-gen data center and cloud technologies. The company's prominent investors include the likes of Peter Thiel's Founders Fund and Kearney Jackson. Shilpa Shetty-backed D2C food brand Wicked Good secures 20 crore rupees, led by Orias Venture Partners. This round saw participation from Asiana Fund and a clutch of existing investors. Wicked Good will use the funds to ramp up distribution and enhance its existing portfolio. Dental Cart, an online marketplace for dental shopping, raises 85 crore rupees. Malabar Investment pumps in 65 crore rupees and White Oak invests 20 crore rupees. Dental Cart plans to allocate the funds for operational scalability and add more subsidiaries. Antler India plans to invest $25 million or about 211 crore rupees in 50 startups in 2025. The VC has invested in 30 startups in 2024 through its maiden $75 million fund. Amazon Web Services launches a new slate of artificial intelligence models under the brand name Nova, shows off its new text, image, and video generators to compete with rivals Microsoft and Google. Sunday, a luxury hotel brand owned by Oyo's parent firm and SoftBank Group, opens its first properties in the UK and UAE. This is in bid to expand its premium property portfolio overseas. The initiative is a part of Oyo's ongoing efforts to strengthen its premium property portfolio across the globe. Those were the headlines from the startup world. Let's take a look at some more news. Swiggy's losses narrowed by 5% to 625 crore rupees. Its overall revenue grew by close to 40%, bolstered by growth in the quick commerce business. Speaking to CNBC-TV18 about Amazon's entry into the quick commerce space, Swiggy's managing director and CEO Sriharsha Majety said that he feels good about the company's chances given its track record against larger companies in the food delivery space. He also added that they have over 8,800 crores of cash on books. Take a look.
We are no strangers to competition. If you've tracked our overall company, we were born as like the 8th company in food delivery. When we came up, like there was heightened competition even from Amazon in food delivery for a few years in between. So we feel very good about our chances. Ultimately, I think we have a lot of respect for Amazon, but at the same time, the quick commerce business and the needs are different and are emerging. They're not even clear. So I think it'll come down to which companies understand consumer needs better and serve them over the next few quarters.
So if you look at, 3 out of the top 10 of top 7 cities are already profitable. And within these cities, 75% of the stores which are, say, 12 months and above are already profitable. So as we kind of guide for accelerated store expansion, there is going to be the certain investment that will be baked in for the overall neutrality at the corporate level to come by in 4 quarters from now. In terms of the overall cash balance with the IPO proceeds, we have a little over 8,800 crores in bank. So it's a very, very strong balance sheet. As we have said in the past, a lot of this is actually defensive capital to ensure that we continue to have the firepower to continue to remain invested in the category growth. Food delivery business is already generating positive free cash flow and will continue to accrete to the corporate treasury. So overall, we feel a very good place from our balance sheet strengths point of view, and we don't expect to raise new capital in the near future.
All right. Moving on, also on what's brewing, Gurugram-based Wealthtech company ZFunds has raised 25 crore rupees in seed funding led by Elevation Capital, with participation from Yashish Dahiya, the co-founder and group CEO of Policy Bazaar Group. Launched in 2019, ZFunds aims to enhance mutual fund investing experience and outcomes for investors by empowering distributors with the right technology and tools. To elaborate more, joining me now is Manish Kothari, the co-founder and CEO of ZFunds. Manish, welcome to Startup Street. First, take us through the critical gaps that you see in the mutual funds industry in India, and then tell us how are you at ZFunds bridging these gaps through your tech platform?
Thanks, Shruti, for having us here. In the mutual fund industry in our space, if you've seen the last few years, a significant amount of work has happened to build the transactional infrastructure, which essentially means that if a customer wants to transact or do an SIP, he can do that in 5 minutes, including his KYC, etc. But what we see is that whenever people want to invest a significant part of their savings, they seek, expert commitment or an expert's commitment for the next 10, 15, 20 years, because that's the period people invest for. And we see this as the biggest gap today. This is something that is missing. We have just one, advisor or distributor for 10,000 people in our country. I think, ZFunds, using tech, we can build a distribution infrastructure or an advice infrastructure, which can solve for this. This will be done primarily in 2 ways. One, getting new generation distributors or advisors, ready for this business. And second is some part of existing distributors, upskilling them, making them capable to handle complex customers' requirements.
All right, Manish, the mutual funds industry in India is significantly underserved, like you mentioned, with only one distributor for every 10,000 investors. So tell us, how easy is it for traditional offline distributors to use the ZFunds platform? How are you helping them meet the evolving demands of investors? What kind of efficiency do you bring in? If you could give us a use case.
And I say this a lot of times, mutual fund distribution today is not a one-man job. To excel in this business, a distributor needs to do at least 4 things. Needs to specialize, not just do, but needs to specialize in at least 4 things, which is product research capabilities, technology, relationship management, and 4th is regulatory compliance. Not specializing in any one of these will result in a friction between the distributor and his customers. I think with the right use of technology, and the sole purpose of technology at ZFunds being enhancing distributors' customers' relationships, we've solved this to a great extent. And over the next few years, the team is committed to ensure that whether it is trust, whether it is technology, whether it is product research, or relationship management, we will use technology to solve all of this at world scale.
All right. Manish, what systems or checks do you have in place in order to curb mis-selling of mutual funds?
Mis-selling, and again, what I have been a wealth manager myself. I've seen my colleagues, etc. I've seen a lot of clients. Mis-selling, the primary reason for mis-selling is flow of information or access to information. When your customers and distributors are on the same app, they can see the same thing. They have access to the same information. I think you can curb mis-selling by about 98, 99%. I'm very, very proud to say that about 70% sales, SIP sales, etc., that happens on our platform happens on recommended funds.
All right. Moving on, if you could, let's talk about the fresh funds raise. You're now armed with fresh funds. How do you plan to scale up your distribution network further and strengthen your technical capabilities further? Also, if you could first throw some light on where you are currently, what is the scale and reach now?
In terms of scale, we currently have about 10,000 distribution partners who work with us. We've helped about 60,000 customers or Indians strengthen their personal balance sheet through savings in the right instrument. Our total collective AUM currently is about slightly over 1,000 crores in mutual funds. If you include other products, it will be close to what, 1,400 crores. So that's about scale.
Okay. And Manish, which segments are you seeing more traction in?
Sorry?
Which segments are you seeing maximum traction?
Our business, how we built this business is, on SIPs. So our primary focus has been on SIPs, honestly. Within SIPs, we see this segment, which is, let's say, about 5,000 rupees to 50,000 rupees of monthly SIP. That is the segment we see the highest traction.
Okay. One final question, and if you could answer that quickly, if you could take us through your revenue model, the kind of commissions you're giving, and how have you beefed up your compliances for regulatory scrutiny? And are there any plans to diversify further into insurance or small ticket loans?
In terms of revenue, our revenue lines are very simple. It's a percentage of AUM that we make every year. We are at an annualized revenue, through the mutual fund business, about 10 crores a year. Your second question was about insurance.
Yes.
Right.
Would you look at diversifying?
Insurance, though we want to do, and it's a very, very important gap. But I feel that, within mutual funds and within wealth, there is a lot of gap. And we want to be the best there before we move on into a completely new category.
All right, Manish, we've completely run out of time, but many thanks for joining us on Startup Street today, and wish you the very best with all your plans.
Thanks a lot. Thanks a lot, Shruti.
All right, moving on. Employee engagement solutions platform Advantageclub.ai has raised $4 million in its latest funding round, led by Axelor Ventures, bringing the company's total funding to $11 million. In the past year, Advantageclub.ai says it doubled its revenue and secured several marquee clients. And this new capital will be instrumental in further building the company's AI capabilities, including adding new products in the employee engagement and experience space, and significant geographic expansion as well. For more on this, joining me now is Saurabh Deora, the co-founder and CEO of Advantageclub.ai. Saurabh, welcome to Startup Street. Let's start by telling us how this $4 million funding will be allocated across product development, AI capabilities, and geographical expansion.
Thank you, Shruti, for having me. So Advantageclub.ai was started with a vision to make workplaces happier. And we are industry leaders in reward and recognition space in Asia, including India, Philippines, and other regions. But over the last 3 years, we realized that employee wellness has also taken a center stage with reward and recognition. And that has become a big focus area for the company. And we plan to invest some part of this fund in developing the wellness solutions further. We already manage more than 300 crores of GTV in wellness and 1,000 crores overall. Secondly, we as a solution are live in 104 countries. We plan to continue building that and double down on US and rest of Asia. Those will be the two geographies where we'll be investing in. And AI is also something we believe can be very game-changing in the space we operate in. So we can plan to continue building on that as well.
All right. Sort of picking up from what you just said, take us through the opportunity for growth you see in markets like the US and Asia. What sort of expansion are you eyeing there, and the strategies you will use to gain traction in these markets?
So US is a very large market in this space and probably most mature market. Like some of the companies in US have revenues in the range of 1.5 billion plus doing exactly what we do. But we have a better tech stack, better tech product, and we are able to actually drive high engagement and high retention as well as high redemption using our solution. And that's why we believe we have a right to win in US. And we are also truly a global platform which is live across more than 100 countries. So post-COVID, companies are also looking for a platform which can actually do the entire world well, beyond US as well. So we fit into that definition very well. And we have seen some early success in US. We already have more than 30 odd locally and in US. We plan to grow that. We have built a local team in US. Similar in Asia, we already have a leader position. So we just plan to continue consolidating that. It's more about digitizing here than really selling against other people.
Okay. Saurabh, you say your revenue doubled over the past year. Where does it now stand? And what are your projections for the next 12 to 18 months? Are you profitable or have visibility on when you'll be profitable?
So in terms of revenue, there are two parts to our revenue. So today we manage
Okay.
around 1,000 crores worth of redemption on an annual basis. But our revenue run rate would be around 8 million right now in this financial year. And by the end of this financial year, we should be at around 10 million ARR. We expect to double both the numbers in next 18 months or so, both in terms of the budget that goes through the platform plus the amount of money we make in the system.
All right. The employee engagement space is increasingly crowded. How do you plan to leverage AI and wellness to maintain your competitive advantage and differentiate Advantageclub.ai?
So, like I said, in Asia, we have a leadership position. When I say that, what it essentially means is that in reward and recognition space, we win 65 to 70% new deal happening in India and Southeast Asia. So this part is relatively sorted, but we want to continue building on the wellness side. And we do believe AI is a big differentiator in terms of the employee experience. So we recently launched Adva, which is for world's first recognition bot. We plan to add more Gen AI capability into the same system to make the engagement more seamless and get it to the same level where maybe an Apple Siri is, but focused on reward and recognition and wellness as a space.
All right. Sort of Advantageclub.ai has over 5 million users and over 1,000 clients. As you scale operations, how are these numbers expected to grow? Throw some light on your future targets.
So this is the part which gives me most delight. We started to touch lives, and 5 million lives is what we are touching right now. We plan to touch 10 million lives in a year or so, and we're hoping we'll get to 25 million lives all across the world in next 5 years.
But what makes you bullish, Saurabh, when you speak on these numbers?
Yeah, and we have the data, like we already have half of these numbers closed, because in the enterprise, it takes 3 to 6 months to really go live. So we already have half of these numbers closed in terms of partnerships where clients have signed up with us, and it's just a matter of going live now.
All right, that's good to hear. Saurabh, we've completely run out of time, but many thanks for joining us on Startup Street and wish you the very best with all your plans.
Thank you. Really appreciate it. Thank you.
On that note, it's time for us to head into a short break. But coming up, vehicle intelligence firm Vecmocon bags $10 million in a bid to boost the firm's R&D capabilities and expand its presence. We put the firm's chief business officer on the hot seat to find out more. Welcome back to Startup Street. Vehicle intelligence company Vecmocon has raised $10 million in funding led by Ecosystem Integrity Fund, along with participation from Bloom Ventures and British International Investment. Vecmocon plans to use the funding to expand its reach in various segments of the market, including electric two-wheelers, three-wheelers, light commercial vehicles and buses. To elaborate more, joining me now is Girish Bambani, the Chief Business Officer at Vecmocon Technologies. Girish, welcome to Startup Street. You provide advanced computing solutions for EVs, including battery management systems, vehicle intelligence modules, and EV chargers. If you could take us through your tech edge, the pain point it solves, and the kind of efficiency offerings bring to your clients.
Sure. So firstly, thank you so much to CNBC for giving us the opportunity to come to this particular show. So if you look at Vecmocon, it's a pretty interesting company which got incubated in IIT Delhi in 2016. And the pedigree of the founders is pretty interesting, where Piyush, who's the CEO, he comes from IIT Kanpur, Shivam coming from IIT Delhi, and Adarsh, he comes from ISB pedigree. So what has happened is over the period of time in the last 8 years, there's a lot of R&D which has gone into it, and we have come up with very interesting offerings where we call it onto a journey of vehicle intelligence. And this is where, when it comes to the BMS chargers as well as vehicle intelligence module, these are some things which are already live. Now, what fundamentally happens, at the end of the day, there are multiple pain points in the ecosystem. If you see around into the arena that we are in, there's a lot of transformation that is happening, and which is led by 5 different trends. The first one being software and services, second being from personalization, third from automated, fourth from connected, and fifth from electrified. Now, in the scheme of things, if you see the Indian EV ecosystem, at end of the day, providing reliable products at a cost economical point becomes an extremely important point. Many a times, companies are able to just meet the bare basic certification standards. This is where we are able to go above. We don't just stick only up to the certification, whether there is the AIS 156, but we are able to go a lot deeper technically to provide safe solutions. So that when it comes to the OEM and the end customers, they are able to really rely on to us. It's also important that when we look at the whole EV ecosystem in India, we are one of the very few which has also moved forward into many more aspects. And this is where it comes with respect to our platform as a service, which is also one of the unique things because of which insights we are able to generate.
Okay, so Girish, give us a sense of the kind of EV firms that you're partnering with. Who are your clients and which segments are seeing maximum demand?
Sure. So, Shruti, what's happening is we are working with 2 of the biggest top 5 OEMs in India right now. And as we are speaking, those particular vehicle launches are lined up in January, February. Additionally, if you see, Excite is one of our key customers, Battery Smart is a customer, Bigos is a customer. There are many more customers in India as well as the Southeast Asia, where we have been working since last few years, and good revenue is being generated.
Okay, you've raised 10. Sure, go ahead.
So some of these customers are practically the OEM itself manufacturing the two-wheelers or three-wheelers. Some of these are the battery manufacturing firms.
Okay. Like I mentioned earlier, you've raised $10 million to strengthen your R&D capabilities and to expand your reach. Elaborate on these plans. What new offerings are you working on currently, and what new geographies globally are you eyeing?
Sure. So fundamentally, if you look at the Indian EV ecosystem, we will be one of the first ones in India which will be setting up labs even for the high voltage systems. And this is where we see it's a huge opportunity, whether we talk from a bus or truck segment, or for that matter, the energy storage systems per se, where a certain portion of our funds would be moved around. The second aspect is also with respect to further expansion in the R&D domain itself, which also includes developing advanced 5G connectivity solution. It also includes working on motor controller unit and many more product offerings. So net, if if you see, there is a strong R&D pipeline which has already been laid out on which we are working. And from a geographical expansion, while we are present in India and especially Sri Lanka at the moment, we are looking at early exploration in the Southeast Asia, where typically the belt of Indonesia, Malaysia, and Thailand comes in. At the same time, some early explorations have started from an African territory as well.
Okay. Girish, for the fiscal year ending March 2023, Vecmocon reported 4.2 crore rupees in operating revenue with a loss of 41 lakh rupees. Where will you close this year and what's the path to profitability looking like?
To make this correction, actually, we did not close in loss. We actually were profitable even 2 years back. And even the last financial year that we have closed, we have grown by multiple X and we have closed bottom line positive. So as far as where we will land up this year, I will be frank, we have already crossed the revenue numbers of what we clocked last year. Exact numbers can't be disclosed because of confidentiality reasons. But the bottom line is we are growing and we are profitable at the same time.
Okay. Girish, coming back to this fundraise, it is the first phase of your Series A funding round. How soon are you looking to close the round? Will you be raising more funds anytime soon?
That's a good question. So there is interest which exists from some more investors, but it's also something we'll have to take how it moves along. Planned already.
All right, one final question before we let you go. With the rise in EV adoption in India, what is the kind of potential you see for Vecmocon? And it is an increasingly crowded Indian EV market as well. How do you plan to compete with the big boys?
So it's pretty interesting where there are a couple of things which really stands out when we talk to our customers and get feedback, what really differentiates from their lens. The first one is the agility and the turnaround time at which we are able to work with our customers. The second is the tech detailing which we spoke of, right? So we are able to really go deep and solve those pain points. And at the end of the day, there is a lot of evolution which is happening in the Indian EV ecosystem. We definitely see becoming one of the pioneers when it comes to the compute of things. At the same time, this is where maybe let's spend a minute to understand this fundamental aspect. Today, in a vehicle, there is a lot of data which is being generated from battery. There's a lot of data being generated from motor, or for that matter, from the charger. And additionally, there's a lot of data that gets generated because of the driver profiling, or for that matter, driver behavior. Now, all these things is something we bring bottom into a specific AI platform which we are building. And with this, we are able to achieve actionable insights. And this is where the differentiator starts coming in. Because we understand compute components, because we are able to design these products bottoms up and manufacture at the same time, we are able to drive those insights. One, for example, residual value.
Girish, we've completely run out of time. Girish, we're completely running out of time, but thank you for taking us through, your competitive edge and your tech edge. But with that, I'll have to wrap up this conversation. Many thanks for joining us today on Startup Street and wish you the very best with all your plans.
Thank you so much. Thank you so much, Shruti. And thanks, CNBC.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.